Let's check. All right, guys. Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns while keeping you up to date with everything that you need to know. What helps investors beat the market is information and knowledge of how to use it, and we'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications because every time we drop a new episode, money is made. All right. Um, Let me first start off this episode by saying good morning, good morning. What's up, Cecily? What's up, Kenneth? Um, I actually need to, you know what, guys? Give me 1 second. I have you know what? No, we'll leave it as is for this particular episode. 1 second, guys. What's up, Burn Rich? What's going on? What's going on? All right. So let's be clear about one thing right now. Um, be clear about this. We have at this very moment we have our VIX sitting at around. At this very moment, we have our VIX sitting at around. What is this? 18.4. All right. Um, for those that are not familiar with the VIX, this is our volatility index. This lets us know, um, when the market is essentially experiencing um, high levels of bearish sentiment or high levels of complacency. It's one of the premier gauges of fear and greed in the market. Now, despite what happened on Friday, and despite what's been happening to close out this week, the VIX still closed the day pushing back to the downside. So that should be something that you take into account. Okay, definitely take that into account. Um, Now, for me, this means that we don't have the ability to just bet on future downside. Okay, we don't have the ability to just say, "Oh, it's over with. That's it. It's done. We're dropping 20." All right, we don't have that ability right now. All right, keeping that part simple. Um, we're seeing some weakening in the market, but the VIX says that that may just be temporary for whatever reason, and until we start to see the VIX hold above 20, we have no we have no actual, like, definitive proof that the market is starting to spiral. Okay. Now let's go to the weekly chart here for the SPY. Take a look at the weekly chart here. And you can see that, looking at this weekly chart, you've had 4 consecutive weeks where we closed below where we opened. Right? 4 consecutive weeks closing below where we opened. All right. Now, this downside that we're seeing right now from a weekly perspective is the first real drawdown that we've seen since the war began in April. All right. The first real downward move. In total, looking at the SPY, and we'll take a look at the QQQ after, right? It's about a 5.8% drawdown. To get a 10%, would have to go to the 50-week average here. That'll put us at about 10%. Um, so we'll keep that in mind. Now, I also want to point out that, um, despite that pushback in the market, we still ended up with more stocks, just one more, bump up in stocks trading above their 50-period moving average. All right, so this drawdown right here, um, probably has more signs of a buying opportunity than a selling opportunity for now, until we start to see some more weakening in the market. Okay. Now, let's stay on the weekly charts for now. All right, Qs. This looks just like chopping consolidation. And this is exactly what we've been talking about. This is exactly why I've been pushing people to trade, these T triple Qs, S triple Qs, instead of taking the options route, because really you're in a market that's going nowhere, right? And when you're in a market that's going nowhere, what happens to options? Well, you get theta decay, and you get chopped out. And you know, if we're gonna be honest, you know, um, a lot of the wins that we end up being a matter of like we can say in many cases we can say thank goodness, that played out because there's no definitive direction here, and this is going on a 4 week stretch. Okay, this is going on a 4 week stretch. I'm getting rid of, y'all know me, I get rid of all my levels. All right, just getting rid of all these levels, getting ready to set up my next chart. Okay, so that's what we're looking like right now. So yes, you still have this up move here. This likely you can look at this as maybe being a flag of sorts, but um, that would require you to take a longer term upward outlook in the market. If you want to do that, then make sure you get at least 90 days on your contract, and you set your targets, a reasonable amount to the outside here. Okay. For the Russell has finally found a little bit of strength last week, closing out pretty well. Um, so small caps you know, are in the leading position right now. The reason I didn't turn around and start betting on small caps right away is because I wanna get them back down here. I'm not gonna play this game right here. Right? I play this game. I don't play this game. Okay? This game is a dangerous one. I don't like to play this game. I like to play this game here, back at the averages, here, back at the averages, or at least back at key levels that I can trust. All right. And while we're talking about it, let's actually get to the point of mapping out some levels that we can trust this week. Let's go into the daily chart, and we're gonna focus on the QQQ and the Russell. All right. SPY lost its 50-period moving average, as you can see here. So we're not gonna take that on right now. I do think it's interesting that the SPY is down here. I do have my short Bank of America trade still open. I held that over the weekend. I think it's going to be pretty interesting. I could easily lose that trade because, maybe the SPY finds some strength and bounces on Monday, and likely it's going to take financials with it, you know. But oftentimes, Bank of America and financial stocks in general, oftentimes they may fall into a new earnings season, and I'm going to see if that's the case. This time around. Um, I'm not trading the earnings. I'm trading, the lead up into the earnings, and I'll likely be out before the earnings even happen. All right. So we're trading the Nasdaq and the Russell because they ended up still closing above their key moving averages. Russell above all averages, Nasdaq at least managed to hold on to their 50-period moving average. Okay. So right now, let me just make this very clear. Okay. So market rallies, check. Market pulls back, breaks new high right here, check. Okay. Um, Market pulls back again, an even bigger pullback than we had right here. That was your first warning sign. Okay? When this pullback came in pretty much twice as the size of this pullback, that was your first warning sign. You bounce, you cannot get back to the highs. Okay, cool, no problem. Now, if the Qs were to break down next week, I do not believe that this level here will provide much support. I repeat, if the Qs were to break down next week, I do not believe that this level here will provide much support. Why? Well, when we have a bounce off of a key level, all right, or let's just say a bounce, let me phrase that. When we have a bounce here that doesn't pan out, meaning it didn't play out all the way to the upside here, usually there's either something happening from an economic perspective, right? Usually something happening from an economic perspective or from a valuation perspective that's making it so that way this doesn't play out. Or let's just say from a macro perspective. All right. Now, if we manage to get a bounce here, right, that'll let us know how strong at least this new low that we're setting could possibly be. If we can get back above this point and this point, we need to clear all of this here to get some burden of proof here that this is a strong level. Otherwise, then that's a sign that let me put it in text for you. Okay. If we do not get the if we don't get the market if we don't get the market bouncing from here and clearing this area, then that's a sign that the floor is weakening. So let's put it in text for you there, all right? Because now you have one key level, one bounce that couldn't do it, two bounces that couldn't do it. Okay? That becomes a sign that the floor is weakening, meaning that there's not a lot of demand around these floors. Okay? So keep that in mind. Now, we could be going through a volatility contraction. As you can see there, see that contraction in right? Here, here, here. Okay. Now, if that's the case, then that means that we're building up some energy here to make a move. You'll have to watch very closely to see if those to see if there's accumulation happening or distribution happening within those ranges. So let's go to the QQQ here on the Pro Pivot indicator. Okay. You can see right now you have an accumulation bias, meaning even as those ranges start to play out, those midpoints are still climbing. Those midpoints are still climbing. Okay. So for now, I have no choice but to live with the assumption that if this volatility contraction continues, so if it, all right, works its way to an even finer point, that the eventual breakout will be here. Okay? Boom. I have no choice but to believe that. This doesn't mean that I'm gonna pan out to get my next $1 million trade or something like that there, right? But um it's an idea, it's a concept, it's an understanding. And when you can develop that, then you can develop um you know a system that works around that, right? Like my system is developed to work around understanding what's going on, right? So, for example, let's say this plays out like this, right? So, boom, 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 boom. All right, and let's say they get this last little pullback here. On this last little pullback, my system might say, hey, you know what? Let's buy during this pullback. Let's buy during this pullback. Um, Set our stop losses here. All right, back here, and let's see if we can get a bounce. If I get stopped out of a trade, you gotta stop spinning your wheels about every trade. Okay, 100% that is a fantastic trade idea, and when I execute it, I will do so with confidence, and I will live with whatever the results are. Period. All right, that's how I operate. Now, so if if we get another bounce that cannot make it to the high, the floor is weakening. But if we get another pullback that doesn't make it to the low, that says the ceiling is weakening as well, and that's why those breakouts end up being so huge, right? Because either way it breaks, it's going to be huge. All right, you're going to have a lot of people build up here, here, and here, either wanting to get in or get out. Either way, that spurs activity, activity, activity. Okay? It gets people moving. It gets money moving. Right? And once money starts moving, the market starts moving. Period. All right. So for the Russell, um, we're gonna go ahead and check in a few to see, just to kind of see what this looks like here. So we got our QQQ notes here. Um, which stated that volatility is contracting with an accumulation bias for now. Okay. Volatility is contracting with an accumulation bias. That's what we'll leave it at that for the QQQ. For the Russell, when it comes down to the Russell, you got a lot of strength happening here, but here's exactly why I don't play this game here. All right, I'm not playing this game here. All right, this game right here. No, I'm not playing this game. I want to play this game here. All right. Um, very, very important. Very important that we understand what game we're playing. Now, before We had the Russell in this area here, and this area here, right? Didn't quite show much respect for didn't quite show much respect for the 20-period moving average. And then on this last pullback, boom, we got some respect. So what do? I wait for another pullback into this in this area right here, right? Into this area here to see if we get some another sign that the 20 is now strong support. Okay. I mean, if you look at what's going on in here, this is a lot of chop here, you know. So make no mistake, this is not the strongest trend I've ever seen in that regard. We have 6 consecutive sequential closes, closing above where we closed at 4 days prior. Um, your edge is not that strong right now. I mean, everything is suggesting that um, Russell 2000 has some strength in it, but we need to wait for a pullback to some key support levels here. All right, that's what everything is suggesting to me right now. We're at 299 here, so still above this here. Look at your ADX. Your ADX just keeps getting lower and lower, and that's largely because, again, look at these days here. That's just kind of like peppering things in. Okay. Um, and you got to ask yourself, how much time did you spend going nowhere over these time periods? So look, a lot of time going nowhere here, a lot of time going nowhere here, a lot of time going nowhere here. So if I look back over these past few weeks, I mean, where did we really go? Yes, we made a move higher. We did. But look at the average directional move here. The average directional move is really, look, right here. The average directional move is really nowhere. And then you have this one day of a pop. So it's easy to look back at this and say, yeah, man, I should have bought the Russell and I should have stayed in it and I would be blah, blah, blah. And more blah. Right? It's easy to say that when you look back. But in the moment, we had our moments, I think we took these trades here, but this, I just left it alone after that. So this little bit of upside that's been left, I haven't been a part of this because it's just not it for me. Right? Just not it for me. All right. Now, so that's what we got going on there for the Russell and the Nasdaq. Now, let's analyze. Let's double down on our analysis here, and let me introduce you guys to the latest member of the team, the Options Insights. Let's take a little glance here and see if the Options Insight agrees with my analysis. Notice I didn't just grab screenshots and run to the Options Insight. Notice I analyzed myself first, then I came to the Options Insight. And you can see it's stating what I'm stating here. All right, strong bullish trend is there. All right, got your breakout swing and your close above the high of the low day. Cool. But you're in a wide state. Is that not what I just, right? I just got done stating this, right? So this is what I meant when I said we're not playing this game up here. We're not playing this game up here. All right? We'll play this game down here, down here. We'll play that game. We're not playing this game up here. Okay? Um, so you still have your path of least resistance is still to the upside. Okay? I repeat, your path of least resistance is still to the upside. So there's that part. Um, your your downside target is about 283. By the way, this is coming from the pull pivot indicator, right? So that your downside target's about 283. Your upside target here is 311.78. So there's still a higher probability of hitting that upside target. All right. Shout out to Waka Flocka for the follow. Much appreciated. All right. Now, around the current price, it's not a lot of confluence around the current price. All right. Um, yeah, not a lot of confluence around the current price there. All right. Um, now you have this area here and here. All right. The point of control and the first week's resistance. So the confluence is actually on the resistance side right now. Okay, your confluence is on the resistance side. Give me 1 second, I gotta send a quick text message out. All right. So so your confluence is at these resistance levels here. So it starts by giving you the confluence around the price first. All right, starts by giving you the confluence around the price first. So you're at 299.83 right now. That's where you are right now. Um, your first resistance is 299.36. All right. Your what was the other one there? Your point of control is at 298.53. That's your 14-week point of control, by the way. It's not the it's not the point of control uh from the volume profile that I have on my chart, but from the actual volume that we've seen from a week over week perspective. Okay. So let's see, we count back 14 weeks. What do we have here? 14 right there. It's about March 23rd. All right. I got this set to March 30th. So just about in the same ballpark there. What's up, April? What's going on? What's going on? Now you see here. All right. Now, like I said, so you still got your strength here, but you're in a wide state. You should not be buying above certain levels. All right. There's not enough head space to the upside. So your next point of resistance is going to be, right, these second points of resistance here and here. Right. So now if we come back over here to the options insight, all right, let's go to the playbook entries. Okay, and you'll see that? You start to see your other levels start to pop up as as your other areas of resistance as well, right? Your let's see here. So you would still get on the long call side. Um, let's see what it has to say to us. Let's see if it's kicking the game we want it to kick right now, right? So it's confirming an established high probability bull market regime, strong structural support layers, prices established firmly above the 20 and the 50, indicating clear bullish trend. The short term 20 is rising, suggesting buying pressure remains structurally intact due to high spacing. The asset is moderately overextended away from its macro baseline, raising the risk of a mean reversion. The ADX level is a 8.9, indicates a ranging profile lacking decisive volume, susceptible to temporary spikes. Okay. So um you're looking for a continuation move towards 311, it's saying here, right? But you can see that it's warning of the same thing I'm warning of, which is the risk of a mean reversion. So you decide when you would pick up this this contract here. You got some strong support around the 285 area here, right? And here. So if you were to pull back towards 285, I think that makes for a much better purchase for IWM. All right. So IWM, my notes here would say it's overextended. All right. Look for a pullback toward 285. Now, we also have here where your you know your 20 MA has some some strong support there as well. So we'll say or toward right, or towards the 20 SMA. Okay. So what it did for us here was it was able to just aggregate the data that's in a pivot indicator and just put it all together in different categories. You see, it was able to categorize the data for you, um, and lay it out in that way. What do y'all think? What do y'all think though? Still got some work to do on it. That's why y'all can't get it yet. Um, like I would like for this 20 SMA to have been listed under the floors here. All right. That would have been better there. All right. So, and identify like the true overhead ceilings. All right, so I'm gonna actually write those notes down. All right, so but for right now, it's doing a great job of identifying the it's doing a great job of identifying what's you know what's happening with the market right now. By the way, so yeah, and you click on this, it can show you click on this and it can show you the areas that are looking very strong right now for the stock. All right. Now let's go to the QQQ real quick here. And let's go ahead and pull them up real quick. Let's see what's going on over here. Now the QQQ is in a transition here, potentially transitioning into this lower volatility area. So the hourly cosigns. So you're saying you're looking at the hourly chart right now, Cecily? Is that what you're saying? Yeah. Okay, cool. Excelente. Let's see if it agrees with our let's see if it agrees with our analysis here. So moderately bullish for the QQQ. You can see here, see it says 6.38. It's actually measuring our 6.38 here, 6.39 right here. So it's just about right. Closed below the low of the high day here. In a wide state with a falling 20 SMA. A lot of things not panning out here anymore. But for now, this is still a pullback and a strong trend. For now, path of least resistance is still to the upside. You have you have your um, you have your sell side closing target here. That's about a 72% chance of hitting right now. So, both sides have some pretty decent odds of playing out. All right. Um, so yeah, the pretty much so the current price is sitting near a lot of this confluence that's here. All right. Let's see here. Let's see. Establish high probability bull regime, compressed trading beneath the 20, but staying safely supported by the 50, as we talked about, right? The short term 20 SMA is sloping downward, warning of a near term deceleration in momentum. So, due to high spacing, the asset is moderately overextended away from its macro baseline, raising the risk of a mean reversion, as we discussed. The ADX is level 21, a ranging profile lacking decisive volume, susceptible to temporary spikes, as you saw with the Russell. Now, price is positioned immediately beneath key declining SMA resistance structure. Right, we would look for we would look for the put here is what they would go for. Now for me, right? Um, for me, the the S triple Q would be a better play here. And I thought about that on Friday. That'd probably be the best thing that I could do. Would have been just to hold on to some S triple Qs over the weekend. All right. So that's what we're looking like for right now. So you would pretty much be long the Russell, short the Nasdaq, or long small caps, short large caps for now. But you know, I think if we need to see a drop in the Russell and a pop in the Qs, and that may make a lot more sense for us there. All right, it may make a lot more sense for us now. Let's talk a little bit about these market valuations here, because what we saw last night. Let's see here, 1 second here. We saw last night right here, as you can see, the market itself still holding on to some value here. All right. And this is close to where we bounced from the last time, right? It's around 8%. Not a bad not a bad, level here. Cool, you picked up some extra for the weekend, Cecily. Excellent, excellent, excellent. All right. I think that was like the best play of all of them. Would have been like some S triple Q TZA. Or for maybe like a pullback in the Russell 2000, and maybe at least a drop into Monday for the Nasdaq before we start to bounce again. But yeah, I won't be buying the Russell unless we visit those lower levels there, as mentioned. Now let's just check on the tech sector here. That's what we're looking like. So the tech sector is back below 15% yet again. All right, back below 15% yet again. It's well, it's a 14%, but um, very interesting. Um, let's go back past 5 years here. You see, historically, minus 20% really gives the juice. All right. All right. You can see here. This is your real estate sector. We've just been getting a little bit of bounce out of them recently. Industrials, just as you can see here, right? Industrials manages to just stay above these levels here. Let's go to the 5 year. So, you've had April of last year, November, and then you had 2022. But, it's a tough go of it trying to get industrials down here with the rest of these guys, as you can see. Healthcare, the we bought some healthcare. We bought some healthcare recently, and that has played out wonderfully. Since then, I think that this is definitely giving us some. Then this is definitely giving us some signs that the market is getting a little bit defensive, though, right? Look at your consumer defensive sector there, and look at utilities, right? Utilities is holding up there, so the market's definitely being a little cautious. Um, but you wouldn't be able to tell it from the surface, right out the gate. You know, all right. Now, moving on from here, um, let's do a little. Let's do a little. I'm gonna get my portfolio scan started. Let's start my portfolio scan real quick. Let's go ahead and get that started. And let's see how we closed out the last week. I'm gonna let that run in the background here. And in the meantime, let's keep the technical factors going. All right. Let's go over the bar chart. Huh. That was an interesting note I just saw there on Qualcomm. I'll read that later. All right. Now, let's go to our commitment to traders real quick first. Take a little glimpse. Remember, when it comes down to the commitment to traders, um, you just want to look at it from like a trend following perspective. Let's go to your non-commercial guys here. Okay. Extreme shift in, look at this, guys. Extreme shift in the positioning here. Um, for these guys here on those minis. They got rid of some of the micros. Um, a little more short tech than we were on the minis, a little less on the micros. So, I mean, in many ways, it's like they turned this into less of a hedge against the downside and more towards an actual bet towards the downside for the Nasdaq. But um, with the S&P, I think that drop in the S&P um, really gave some opportunity there. Um, below the 50-period moving average, right? We talk about that. All right, so we'll see. We'll see how this plays out. But we probably squeezed their pockets a little bit with that drop off. Slightly higher bets on the VIX, but nothing close to where we were on June 9th. So for this, what I'm seeing right now is a trend that's going to bet on a more balanced market. That's what I'm seeing. Right. So COT betting. on a more balanced market. And we have been seeing that with the stocks over 50, like I said, climbing even while the market dropped last week, right? Or on Friday, right? So that goes to show we are experiencing maybe a broadening out. And so they want to be a little less concentrated in tech, right? And a little more broad with the S&P 500. That's what it's looking like to me. Okay, so less concentration. So be mindful of that. Now, being that the market was down on Friday, let's go over to FinViz and see. Let's see here. Oh, look at that. Healthcare. One second, guys. Sorry about that, guys. All right. So so yeah, as you can see, healthcare, as we were just talking about, right? There it is, right there. So that healthcare that we picked up really played off over the past week, over the past month as well. Healthcare is really paying off. So, you know, and this goes to show that broadening out that we're talking about. A little bit of selling in tech and industrials here, with industrials already being a pretty overvalued sector. And I think that has a lot to do with a decline in earnings in industrials. So while it while it seems like industrials is doing really well, when you look from an economic perspective, um, you know, there's something happening beneath the surface, from a market perspective that's leading to these, a little bit of pushback here in industrials. But over the past 90 days, though, it's working out. So you know, materials, energy, tech, industrials sold off on Friday. So you probably look for your opportunities in these areas here. All right. Um, that'll probably be where you look for your opportunities. And the 5% drop off in tech um, really helps the case for finding some opportunities. All right. Now let's see here. Let's go back over here real quick. Where are we? Okay, so we're about halfway through the analysis here, and look at this, guys. All of a sudden, a little margin of safety is creeping its way in. You see how that works? See how that works? We got a little window here. Got a little window here, a little margin of safety peeking its way in. Um, that's a good look, especially in energy, and that's where these highlights come from, right? So we can see here we got Broadcom right here. We'll come back to that in a second. So communications, energy, software, communications, energy, software, a little bit of staples here. All right, so far. But yeah, we got some margin of safety creeping in, guys. Let's write that out here. So be on the lookout. All right, and we run our own index. So looking from our index perspective, this looks really good. Now, my question becomes now, um, you know, how many of you guys tested the new portfolio tracker? That's one question. Who tested the new portfolio tracker? And did you transfer your grade and outlook from the previous one? All right, who got that done? Let me know, let me know, let me know, let me know. I sent it out before we opened. Sure you got that before we opened. So, like I said, opportunities right now, the best opportunities, the biggest opportunities that I see so far are in energy, communications, software, um, healthcare. One second, I'm writing something down real quick, guys. All right, let's see. Oh yeah, that discount just keeps growing, guys. That discount just keeps growing. Yes. Now we talking business. Now we talking business. Let's talk about it. Paulie said to go see Vinny. He got something for you. You know, a nice discount on the market. So Paulie, you better have my money, man. All right, now let's go see how things are lining up here a bit. All right, so opportunities. All right, so energy, health. Mhm. You know, software has been offering that. Software has been offering that discount, so we're not, okay. So, but this is why we built this thing, guys. This is why we built this, and it looks like semiconductors might have given us I get us a little pullback there too. Just might have. Yeah, 2.9% now. 2.9%. All right. So let's go over here. Let's go to the screener real quick here. First of all, let's go back over here real quick. First of all, I want to point out that of the ones we mentioned, healthcare seems to be in favor right now. You know, seem to be in favor at the moment. Relative strength is on point. Screener. All right. I'm looking at S&P 500 names today. Look at S&P 500 names today. Let's go healthcare. 59 of them things. Let's go fundamentals. The one thing they shouldn't have is a price of free cash flow over 40. I mean, I don't, not even debatable. Hold on a second. Let me see. So 9 of them just disappeared. Better be profitable. 4 of them just disappeared. I'm looking for a little dividend. Let me get a little dividend today. I'm looking for a positive dividend yield. Let me get a little divvy today. How dare you be in healthcare and not be paying a dividend? We ain't got time for you right now. At least 2 of those last companies didn't even have a Positive projected earnings over the past year. All right. Positive. All right. Johnson and Johnson, huh? Johnson and Johnson, huh? Hold on now, my margin of safety coming down. But this is pretty decent though. I'll take it. Little 3% margin of safety. We'll take it. And we'll take it. Okay. Now, watch this, y'all. Watch this. First of all, let me do this real quick. First of all, US only. We got 15 companies here. Let's go. Where we at? Let's see. We got 8 pages. Okay. 150. 150. Okay. I want the 50 stocks in the middle here. Look into it right there again. So 50. 100 right there. Let's get on this page right here. All right. So here we go. We're gonna box this 20 in right here. We're gonna split them into two groups. See who survives. RSG, REGN. I'm sorry, hold up. 1 second. So there we go. POTUS, ADP, Masco. Okay. KMI, GPN, TXT. CME, HBAN, ES Energy, H. All right. All right. So it looks like the highest average rank is MAS. Sorry about that, man. Um, let's see here. So we have MAS. They seem to be the ones that have the most going on here. All right. So let's plug them in real quick. Let's see what they got going on. All right. What sector they in there? MAS is building products. Okay. Okay. I can dig that. EXR and Otis is the next ones up. Otis is specialty industrial machinery and EXR. So we're not gonna do EXR for this particular one here. This industrial storage. It looks like it's playing out though. It's playing out just fine. I want to write them down, but we're not gonna really analyze them today. Looks like So, MAS and Otis. Um, okay, let's see. Masco, it's a buy with an exceptional outlook. Um, Interesting. F score, excellent. Return on invested capital, okay. Everything's intact. So they just, a little bit of a slump in sales growth for Masco, but it's actually looking pretty decent. Let's see here. Sell home improvement products like faucets, cabinets. Oh, Masco. Okay, got it. Okay, I know. Okay, I think a lot of us know these guys. All right, well-known brands like Delta and Bear. Right. Yep. Oh, I think we just stumbled across something, guys. See that? You gotta do your research. You gotta do your research, man. I'm liking them. Okay. I think we just stumbled across something here. I didn't realize this was mass. Let's go. You know. Let's see here. 1 year return about 25.5%. Dividend about 1.8%. It'll give a little bit of a boost. It ain't, 1.6%, I meant to say. Um, Give it a little bit of a boost there. Not bad. What's that price target looking like? So you need about 52 bucks. Okay. Masco Corporation. Okay, sure. Significantly higher than the 88 cents the analysts expected. Um, okay. Beating earnings, record-breaking profits, prioritizing profit margins over total market share. Okay. Guided by timeless investment law, the pricing power is the only true defense against a weak economy. Okay. Huh. Interesting. Ah, okay. Interesting. That price to book is it's a little up there, which brings us back to the point. So no major red flags, but valuation issues is where we're at. We would want this we want a lower price for this stock, but I like them a lot. I like them a whole lot. Right, now, the next one was Otis. Else was Otis. And we are just about at we're just about at our time right now. So we're you know we covered some good ground here. Um, so we got this contraction happening in the Nasdaq, overextension in the Russell. So you're gonna need for that pullback in the Nasdaq to play out. I'm sorry, pullback in the Russell. I meant to say to play out. Um, you know, some shorts over the weekend on Nasdaq could have played out. We'll see. I would have probably went long S triple Qs instead of taking short. Taking the long puts. Um, just so much better that way. Yeah, I'm not feeling Otis right now. Yeah, I'm not feeling Otis. But yeah, and Otis is linked to the real estate market in China. No, thank you. Yeah, we good on that. If you know, you know. I'm not gonna get into it. If you know, you know. But almost every I'll say this much, almost every um near collapse in real estate in the past 5 years was happening in China. You know? That's all I'm gonna say. I'm leave it at that. And Otis has got their eggs tied up in that basket. Nah, I'm good. It makes sense why their negative equity and things are not going so well for them right now. It don't take me long to, you can identify the things right out the gate, right? Like I identified that one thing that mattered more than everything really quickly, right here, right? Slowing real estate, they face a threat from the slowing real estate market in China, right? That's one thing right there. What I tell you guys, find that one thing, right? That's the one thing right there that says hell no. You can find the one thing that says hell yes. You can find the one thing that says hell no. This one says hell to the no. No, no, no. Okay? We're not doing it. So for the day, um, we're gonna go with Masco as the potential investment there. Um, and we're looking for trades in either trades or investments in energy, healthcare, industrials. We're going to continue to look at software, communications, and semiconductors. Looks like they gave us a little bit of a discount this week as well. So those are the areas where things are looking best. About a 2.8% discount in our equity channel index. That is a really great discount compared to where we were. I think that there's you know, there's definitely some opportunities out there. Now the market's taking this. I think what did I say? That was about a 6% drop. I said. What was that? A 6%? I think I said. Let me go back. Let's go back over here. Let's go back to the spy. I don't know. I think it was the spy I was looking at. Yeah, just about almost a 6% drop, right? So, you know, um, So look for some opportunities in those sectors. I'm gonna point them out again. Energy, healthcare, industrials, software, communications, semiconductors. Okay, energy, healthcare, industrials, software, communications, semiconductors. You may have some opportunities happening there, and we got Masco on our radar, which gives us some exposure to the industrial market for you know essentially like home building equipment and supplies and stuff like that, right? Um, the commitments of traders says we're betting on a broader market at this point in time, and I would definitely say that that's something that we pointed out a few weeks back, and now it's starting to play out here. Um, don't don't get overzealous and start betting on the Russell where it's at. Wait for that pullback, either towards the 20 or towards the 50 MA, and you got a better buying opportunity there. For the Nasdaq, you may end up actually getting a selling opportunity off of the declining 20 period moving average if all plays out. And if you really want to be patient, just wait to see that 20 and 50 MA on the Nasdaq crossover. Right? If you really want to be patient, wait to see if that 20 and 50 crosses over. See right here on the S&P, potential 2050 crossover. Just give it a second. See what happens. Okay? Um, Patience is not going to hurt here. It's not going to hurt here. I promise you that, because in the end, you've been getting a contracting pattern anyway, right? If it works out to the downside, great. You got a confirmed move. Works out to the upside, great. You got a confirmed continuation. Okay. Other than that, guys, I'm gonna leave it here. Hopefully, you guys picked up on some things that you uh can look into over the weekend and get you some opportunities in. All right. Yes. The Russell and the Russell is the ADX for the Russell 2000 is like a 8.7, or it's below. It's just below 9. So all the more reason why we're not trying to buy at those levels at the top end here. Look for a pullback to some support levels, and that's going to work. For the Nasdaq, it's more in a transition. It's more in a transition for the Nasdaq, right? You could be transitioning into uh finally a reversal of this trend, or you could be transitioning into a more narrow trading market for an eventual continuation to the upside. That's why I said you know, um, just wait to see if you get the crossover, man, or if you get back above the 20 and hold it in support. Okay. I mean, it's not gonna hurt you. You'll be all right. Let's be patient here. All right. Is it the same for all companies, sectors, and financials? It represents the index. So if it's happening for the index, then it's likely happening for a lot of companies as well. Right. So if I was to go to, let's say, Apple, right? Let's do this before I close out here. All right. Apple's ADX is about 25.98. Let's go to Amazon. And by the way, and let's say it wasn't happening for a lot of companies. then it could also suggest that a lot of companies are kind of like split in their way of like which direction that they're heading currently right now. Now I see Amazon here. That's 34.93. Um, they're trading at 232 right now. Look to see if Amazon next week. I'm happy you brought this up, Kenneth. So now we actually looked at something else. Look to see if Amazon next week fails to get above this 233.77. If so, they could be back on their way to breaking a new low, a new monthly low. All right. So look for that. Let's see here. What else we got? Oh, what am I doing? Let's pull up some names here. So yeah, it could be that they're heading in these opposite directions. So you got Tesla at a 17.84. So you're gonna have, you know, Apple at like 26, Amazon at like 35, but Tesla's at a 17.84, right? So if we're gonna average those three out right there, Prime Day, they've already started to say that Prime Day has been a success because of generative AI. Hey, who am I? Who am I to say anything different? But yeah, Prime Day results are already starting to come out. You just gotta be on the lookout for them. If you go on the bar chart homepage, you'll see a report about Prime Day on the main page of bar chart. Let's add these three stocks up so real quickly here. So 25 from Apple, 35 from Amazon, 18 from Tesla divided by 3. And what do I get? I get about 20. I get about 26 here, right? So you can see how the likes of Tesla's um ADX drug down the rest of the market's ADX here. Let's look at one more. Let's see here. Let's go to Microsoft real quick here. I'll do Microsoft and Google actually. Microsoft at a 24.82. Let's just do Google next real quick. I know I'm missing somebody, but so Google is a 20.8, which is exactly where the market is, where pretty much where Nasdaq is right now. All right. Let's see here. And so that drags the number down even further, Kenneth, to a 24.7, which already brings us below 20 below 25. Okay. So you can see there it's a combination of all of the it's a combination of all of the what do you call it? It's a combination of all the stocks that it's a combination of all the stocks that you know that make up what the index is actually doing. Okay, so that's how that plays out. So whatever I see from the index, I can rest assured that the combination of stocks is going to you know give me whatever that ADX actually is. All right. Yolanda says, good Saturday session. Much appreciated. And like I said, hopefully you guys picked up on something that you can take into next week. But we will obviously continue to talk about some of these things on Monday when it plays out. For those that are in the portfolio mastery, I will see you at 7:30 for our final session where we will, essentially just continue on from last week and now we'll start to map out just better judgment of when to make these investments. Okay. And for those that are in the Division One finance, I'll see you guys on Sunday. Everybody be blessed, stay well, and I'll talk to you soon.